Hello everyone! After an exciting 2025, we are now looking forward to see what 2026 is bringing for us. And many people are expecting, wow, we have such a severe situation. We may see the burst of the tech bubble, the AI bubble, and sharp drops. So I think the headline is not too much because it is possible that the market will see some strong setbacks. But is it really true? Do we need to see this? Is this just a chance, or is this really coming for the next year? What can we see from the charts currently here? I know many people are arguing from the fundamental side. I can absolutely understand this because some indications are leading into the way for a strong drop in the US. However, as a chart technical guy, I see and I analyze what the market participants are doing. Are they preparing already? And what needs to happen to start a movement like this so that we can react best beforehand? So in this video, I want to have a closer look to the Dow Jones and the Nasdaq. So we want to see what both markets are doing currently, because the Dow Jones, of course, in the long term is a good example for what is happening to markets even in long periods of time. You can see, for example, 1929 here, the strong drop we've seen and the movement we've seen here to the upside. However, we have to compare this with the current situation with the Nasdaq, because Nasdaq is not exactly doing the same thing. However, in some aspects, it is doing the same thing. So we should think a little bit, or see a little bit closer what the market expectations are in both markets for the next year. First of all, I want to mention that I'm a real trader, trading actively the markets for more than 30 years now, coming from the institutional side. And I have a lot of experience with many setbacks. I've seen many of them. For example, you can see we had here the end of the dot-com bubble, for example. We had the subprime crisis. We had the corona crash, everything here. I was part of the game already, starting here early, or let's say very early in the 90s. So I saw different parts of the game already, and I can see kind of same patterns currently. So I think we should talk about this. Anyway, I don't have a crystal ball. I cannot see the future clearly saying on 19th of this or that month something special will happen. However, history does not copy, it rhymes. Market participants behave in certain situations similar. So it's giving us a good impression what we can expect in the near future, what is typical, and how can we early see that this will occur now. So it is a kind of an early warning system. And on the other side, I will tell you what we, from the practical side, not only theoretically it should be this or that, but from the practical side of a trader, an active trader, how you can deal the situation. Please apply all what we are talking about to your own situation, to your own portfolio, to your own trading style, because everybody is a little bit different. It's not necessarily exactly what I'm doing is perfect for the other guys. However, try to translate this to your situation, and then let's see what the next year is bringing for us. So let's start with the Dow Jones. The Dow Jones here is the big picture, and I just want to give you an idea after, for example, the last big crash here, 1929 here. We've seen kind of a 5-wave pattern to the upside. Forgive me that I'm not always drawing perfectly, but you see 5-wave to the upside and a 3-wave corrective pattern. You will hear this maybe some more often in the future. Things like this. This is, of course, a textbook-like situation here. You can see we had a strong movement to the upside. We had some break here. We had a strong move to the upside. We had some kind of break here, strong move to the upside, and so on. So you see smaller and bigger or very big setbacks sometimes. This is something we should keep in mind. However, there's another tool which is helping us to classify, is it something in relation to something? And this sounds a little bit ridiculous. However, Fibonacci is helping us to clarify, is a corrective pattern for the corrective part of a decent movement. For example, if we see from the low here in the early 30s and to the upside, you could see that we are reaching one of these three levels. It's not that it needs necessarily be exactly this one. Please, many people think that these Fibonacci levels are magic lines that the market needs to turn. Very often it is a very good orientation, but please don't take it too serious on the last point here. The most important thing is to see, is the size of a movement and the corrective part in a good relation. You can think about it like a normal working day. If you work first 4 hours and you have a 5-minute break, it's okay, but it's not the complete break you need after this movement here. So exactly in other parts, if you worked for 6 months and you have a 1 day off, this is not the complete holiday. You need something in a correct size in relation to what you've worked before. And the market is roughly the same. And these three levels are giving us a good indication that the setback is big enough. So this is way too small. This seems in a good relation. And this is typically very, very much. Is it really necessary to come back nearly to the same level like this? This is giving us some extra information. So I want to keep it a little bit simple. So sorry for overdoing here in some situations. You could see this part is coming back here to the Fibonacci levels. You can see this one from the whole movement is coming to the Fibonacci level, the 38.2. So this is a right corrective pattern for the whole movement. You could see from here to the next one, .com bubble, you could see that what we've seen here is absolutely okay, because reaching the Fibonacci levels 38.2 and below, it's okay. It not necessarily needs to stay at the level. It should reach roughly this area. This is something not super rare. So if you say, yeah, but this is a non-typical situation, sometimes it occurs. No, this is a really typical one. You should keep this in mind. So I want to keep it easy, so I will skip a little bit in time, and I don't want to go into the deep into these big cycles here. However, whenever some pause, some break, some corrective pattern ends, something new starts. So what I'm interested in is to clarify where are some ends. Here, for example, the end of the subprime crisis was one end. Something started fresh from here. Whatever it was, we had some smaller setbacks here and some bigger setbacks. And if you're not sure which one is fitting to which one, you can just think about, okay, is this fitting with the Fibonacci? No, this one is fitting to the Fibonacci. And if you're a little bit thinking about why not drawing onto this line, this is a specific thing in chart technical analysis with Elliott. We have two ways of corrective patterns. I just want to mention it in a short way, because some of you already know this. Some of you maybe think it's overdoing to go into the deep depth here. But you could see normally we have two, or maybe let's say three different versions of a corrective pattern. Something like this. You can see we have lower highs, lower lows, and a three-wave pattern, which is a typical corrective pattern. You can see this very, very often. The second one is also a three-wave pattern. However, the midpoint here is roughly the same level, or very often even a little bit higher. We call this a sideways correction. This is a sharp correction. This is a sideways correction. And we have something which is obviously a corrective pattern, because you see in the counter movements, so in this down movement, the up movement is the counter movement, we see a lot of overlapping, which is indicating, oh no, this is the wrong direction. If this is the wrong direction, then after that, the market needs to go to the upside. You can guess this was one of these, for example. However, these one are the ugly things, the flat or sideways correction, because many people think in a different way when they see this. However, many of the corrective patterns are looking like this. For example, if you see the subprime crisis, you could see we had something like this here as well. you can roughly understand that this movement here is roughly this what we had here. And this is not the only example. For example, the Corona situation was also corrective, corrective, and one sharp move here at the end, which is roughly similar to this situation. So this was also some typical corrective pattern called a flat. I don't want to continue in this one. I just want to give you the idea, okay, it is absolutely convincing that this movement was a strong movement with some smaller setbacks in between, and we've seen a big one which is qualified for a full correction because we reached the Fibonacci level. So we can think of the Corona crash was perfect fitting into this pattern. Many people were surprised and said, yeah, but this is not realistic, such a big move. No, it's a normal one. It's exactly what we've seen here. It's exactly what we've seen here. It's exactly what we've seen here. And this is currently in the monthly chart. I can show you many examples on lower time frames, of course, even down to 5-minute charts if you're an intraday trader, but this is not the issue for this video here today. So what we've seen so far was perfect. So everything after the Corona crash is interesting for us now, because we see everything until here was in a perfect movement, and I'm switching now to a daily chart to have a little bit more details here. And let's find out where we are. We can see here was a Corona situation. You could see here was also a sideways correction. Then here an ABC up and the Corona final crash. So the corrective pattern, the flat was from here to here, starting from 2018 to 2020. And something was starting from here. What did start from here? A strong movement to the upside. Yeah, but then we need a corrective pattern. Do we have one? Yep, something like this with a lot of overlapping. Perfect. But is the size enough? Is this movement completed with a originally or perfect sized corrective pattern? So we will take a view with the Fibonacci tool, starting point, ending point, reaching. Yep, we reached this area here. It's not about the time. I just want to highlight this levels here, 38.2, 50, 61.8 Fibonacci. So this is the idea that this corrective pattern is perfectly fitting to this movement. So whatever we've seen here is completely corrected in this way here. You can see this by shape and you can see this by size reaching this area. So something new was starting here. So if you wonder, but is it always like this? No. This is really important. It is never always the same. It is just a rule of thumb. It is just something for our orientation. We can never say this works always, so it will work perfect in the future. No, this is not what the stock market is doing. But what we need to do as professional traders or analysts or whatever, or portfolio investors, we don't know the future. Nobody knows the future. But we can understand what is typical. So we normally expect that the typical things will occur. The good news is, if we know what is typical, we can clearly see, oh, what is not fitting into the scheme? What is changing currently? What is going away from what we normally would expect in a typical movement? So let's check what started here after this setback here. We keep in mind it was here in September 2022. Let's check what we had here. Strong movement to the upside, and we had a pattern to the downside. Okay, here we can think of maybe this is a sideways pattern or maybe it's not. I don't want to mention this too strong because for me both would be a corrective pattern and both would reach the Fibonacci area. So this is strong movement. It's a typical setback into the normal area. So we could see that the market continued to higher grounds, and the next big setback was this one. And many kept in mind, oh, this was 2025. The first good start, then talking about tariffs, and this shocked the market. But anyway, it is a corrective pattern. in the up move, and the market continued to higher ground here like this. So the question for us now is this what we see here? Something like a first wave to the upside, a second. Why first wave? Yeah, because this was a completed corrective pattern. Something was starting here. It was not the count of all days, but it was counted from the last big setback. There was no bigger setback than this one at that area. So we can see, okay, this was the start of something. First wave to the upside, second to the downside, third wave to the upside, fourth to the downside, which is typical 1, 2, 3, 4, and a fifth wave to the upside. So I expect we are now in something like a fifth wave. It is possible, at least, that this is happening now. And if this is the case, if this is really going on currently, after 5 waves, very often this ends. You can see this in lower time frames, some higher time frames, that the movements very often move in a 5-wave pattern. Sometimes you cannot clearly understand. You can see that this is not looking corrective, but you have to have a really deep look inside to maybe understand, is this a 5-wave? Yeah, maybe it's possible that this is, or here on lower time frames as well. But typically you can say after 5 waves we need a setback. If this is the case, the setback needs to be measured from here to here. So let's use Fibonacci. I take away all the drawings. And this may be the setback area where the market needs to plunge. If this is really true, if you see strong movement to the upside, this ended, and we need the next setback into this area here, which is roughly 42,000 to 63,000. It can be a little bit higher, can be a little bit lower. It is just a raw idea. If you think, but why is it exactly this one? There's some statistics. I want to keep it easy now. Maybe I can do a follow-up if you're really interested in this, but there are some kind of statistics that a setback is something like this. It's not a normal shaped or Gauss curve here. If you're familiar with the math behind that, it is not in perfect symmetry, but you can roughly say it is quite typical that the setback is roughly around here. And it needs to be in a corrective shape. If both is happening, then we have a good chance that the market will continue to higher ground. To be honest, what I see now here is I would, if something occurs here, expect that something similar like this occurs here, but ideally without any overlapping, because main trends tend to not overlap. An impulsive move is looking like this. You can see we have some pauses in the movement to the upside, but there's no overlapping. That's really important, because this is giving us a clear indication, okay, the main trend is still valid. It's not perfect if the market is doing something like this and we are still moving upwards, but the counter movements are overlapping. So we see from here to here, for example, it's not overlapping. So that's okay. So it's still seemingly the main trend. So I see a good chance that the market will continue after the setback. It's my preferred situation currently, because everything shape-wise, size-wise is allowing something like a continuation to the upside. However, we are at the brink that the market will come down. Not necessarily tomorrow. So please don't press the sell button right now. Let's analyze this on a lower time frame as well. But this is the indication why many people might be not so far from the idea that the market really will have a bad or a tough year in 2026. Of course, if you're an active trader, you can short the market, or you can trade some options if you prefer this. Or if you're an investor, maybe you may think about trailing your stop a little bit tighter, closing your positions when the market is indicating something. Currently, this is a perfect idea, but so far in this time frame we don't see the outcome. It can be any time now, but it can continue first. So please don't sell short now, because the market is at that point, what we've analyzed so far, not indicating this will happen now. However, this is something which is typical, and we should expect this happen anytime now. It is like having an umbrella. You see, okay, there are some dark clouds coming, but nobody's opening the umbrella before the first raindrops are coming. So please don't walk around with an open umbrella. This is a little bit awkward situation. Keep it close, but have it aside. Take it with you, because this may happen soon. So be prepared for this. But we will have a closer look. Maybe we can see something right now. And maybe with the follow-ups I can give you throughout the year, I can give you strong warning signals. Oh, something bad is happening now. Maybe take care a little bit closer with your positions, because the market needs to go down. So my expectation is, because I don't like to see an overlapping, that the higher chances is that we come down somewhere around, let's say, 42,000 to 38,000, so that we ideally, we don't see an overlapping with this situation. If the market is only coming into this area, the blue shaped area here, not overlapping with this corrective pattern, because I don't want to see this one, I want to see this one, so that this is higher than this, so that this is higher than this. Both are same size. If it's smaller size, then it's not overlapping anyway, so no need to worry. If it's same size, then please stay above. Otherwise, we should take care that the market may plunge even way more. But to be honest, this is not fitting into the typical behavior right now. We should not believe that the market definitely will go higher, but the chances in my eyes are way higher. So if you want to sit on your positions, don't want to close your portfolio, then you have to accept that this, even a bull movement, can happen anytime soon now. So this is the big drop we can expect. However, there's something I want to tell you as well, because this drop was quite strong. You can see, for example, that the whole movement from here to here was also in this area. So I can imagine that what we've seen here is something like this pattern already, and this is the complete correction of this movement here. Oh, that sounds better, because this means we have this pattern done and something new is starting here. So the second idea for the market is, if something is starting here, we are now in an up movement. So let's check this, and let's see what we've seen from April this year. You see, I'm switching through different ideas, and then we see that there's some overlapping between the ideas and the action we have to take. Many people are a little bit denying the chart technical ideas, because they said, yeah, but this can happen or that can happen. Yes, because we all don't know the future. I'm living in Japan, so I know earthquakes are not predictable. It can happen anytime, and some other issues also can happen at any time. You cannot plan them. But anyway, ask the Japanese people around me. They are all prepared. The houses are built like this. They know what to do. And we have a good warning system. And that's the same with the market. We don't know when something is happening, but we say, yeah, we can estimate something will happen. And we know what to do, how to handle this. Okay, let's see the movement here. Something new started here in this idea, and we see there was a big movement to the downside, and we can check what is with all the other ones. This one was a big movement, in perfect way to the Fibonacci setback. This is too small, okay? This is also too small, not reaching the 38.2, the first red line. This was also too small. This was also too small. So the whole movement, starting from April 2025 did not see any proper setback. The first was here, but anything else is not fitting. So whatever happens, maybe from tomorrow, maybe somewhere in January or February, we will see that. We will talk about this in a few minutes. We need a setback at least into this area. I don't know whether this will come today or in a few weeks or months, but it is necessary that this will come. So you see, both scenarios we had are leading to lower grounds. The good news is, if it's this scenario, let's say this is scenario B compared to the bigger one, it is not dropping so far. Depends a little bit where this high point is. Is it here or even a little bit higher? Then this levels are moving up a little bit, so the levels might be higher, but you can see roughly maybe 45, 44, maybe even 42 or a little bit below that are typical target areas. And you can see by time, this can last many months. So we may expect in this small setback a few thousand points drop. And in the A scenario I drew before, the market needs to stay above this one. It is even double from size compared to this setback. So in any way, I see a strong chance that 2026 may give the long-only guys and portfolio holders, at least for a few months, a tough time, because both scenarios, whenever they start, both scenarios tend to way lower levels. The good news is, this is not the end of the world. It is just a normal setback like we've seen here, for example, on lower time frame. You can see here, this one, and we will see a setback. Yeah, whatsoever. Nobody cares. And as you see in a lower time frame, strong movement to the upside and a corrective pattern to the downside. Also, again, into the Fibonacci situation. It's always the same. It's not always, but most of the time it's the same. So what we see here on smaller time frames, we see here on bigger time frames, or maybe even in the future in an even bigger situation. So nothing to fear, but with a good chance to react on this. So coming to the conclusion, many scenarios are pointing to lower points for many thousand points. So it's not only a little bit dropping for a few days or something. We are talking about a setback which may last for several months. Seasonally, it's typically not too early, because normally we have a good chance that the market may continue a little bit higher. However, I don't want to trust on this. Do I see anything bad currently? To be honest, no. What I see is that this first setback we've seen here is roughly in the same size like what we've seen here. So I would estimate we are currently in a situation like a first up, second down, third up, fourth down, and we are currently in a fifth wave situation on this smaller time frame or smaller cycle, like whatever you want to call it. But we are at the very end, sounds like tomorrow, but in the last part of the movement before this bigger drop needs to come. So if you are a holder of positions, and if you are not trading the single stocks or focus on the single stock for your market decisions, the Dow Jones, not the technical market in this case, but the Dow Jones is focusing on, we are in the last part. So I think it's a nice idea to at least actively think about trailing the stop, staying close to the market situation. As long as the market is continuing, all good. But if the market shows weakness, maybe taking profits and saying, okay, better waiting at the sideline until we see what is happening here. The small problem is, how can we think about this movement here? because you can see it's not so bad moving to the upside, but you can see we did not see a real good setback. Maybe this one. If this is a complete setback here, it did not reach the 38.2. It does not need to. It's not a mandatory that the market needs to see this. But I have the question, maybe the corrective situation is not done. So I'm not sure this is a good stop situation. For my ideas, many people know that I use the 78.6 level, which is 46,400 roughly, as a stop level, because the corrective pattern should, from statistics, be over above this. So I would survive setbacks like this if they come. If the market is moving, perfect. If the market is coming back, it's not a big deal. We can survive this for the final run of the final run. So it's the last part of the last part which may come. So we would survive this. It's not super far away from the first targets for the smaller setback, for the B scenario. But to be honest, if I'm not sure which I get a bigger, if I get a bigger or a smaller drop, I better prefer to close the position, wait the situation, and then enter the market on a lower price, or even at the same price level when the market is coming back, as soon as I understand the rain is over, I can continue, and we can expect something really nice. So that's what I think is a smart plan here with the Dow Jones. So we all know that the main movement currently is coming from the tech market because of the artificial intelligence and the data center. So it is, to be honest, the Nasdaq which is driving the market very much. I don't want to start from scratch here because the raw situation is the same, and you can see that also here we had a tough year 2022 when the market came back. It's the same corrective pattern, so something was starting here. The biggest part was here with the setback. So we can see from here to maybe here, if this is a corrective pattern, which I more or less prefer. Withdrawing is better, withdrawing tool, something like this. But even if you call it from here just as a corrective pattern, it's roughly the same. It's reaching the Fibonacci level, so there's not a big deal. So something was starting here. And that's the good news. The Nasdaq is preferring scenario B with the Dow Jones, because this one was a strong movement to the upside, the biggest one after this one. And we have a chance that this is the first wave after this. So we only see some setbacks from here to here. Let's measure this with Fibonacci. And let's see what we have here. We can see here we had a good setback because this setback here, this one, was reaching the Fibonacci zone. All the other setbacks are too small, too small, too small, too small, too small. Even this one, which might look good, but it's way too small. It's not the complete setback. So I doubt that this is the complete pause after this one. So what I expect is either the market is now going down directly or is continuing for the last run and then coming down to that level. That's we have to fine tune here from this part here. We will do in a second. However, I think there's a good chance that we don't see the big drop. However, for many people only used to buy the market and saying, the market is internally going up, many people are used, no, it's going upwards, upwards only. No, you should expect that the market reach these levels here. You can see it here on the sideline, 23 to, let's say, 20 or a little bit below 20,000. Which might be a typical, just normal, nothing special. Nobody will ask you any questions. If the market is going here, everybody will say, yeah, this is a normal move. What did you expect? Our grandchild will ask you, why have you been scared in this situation? It is just a setback, like normal setbacks we've seen millions of times. Of course, this is on a bigger frame. So sit and wait until it's over, or actively trade this short or close your position in the meanwhile. looking forward to enter the market on lower grounds. So it's nothing bad around this. But it is important that the market movement down should be as corrective as possible to convince us for re-entering on those points here. But this is another story we can talk about when the market is reaching these levels. Currently, it's too far away. So I currently think, because this is roughly same size like this one, I would estimate that we are now in the 1, 2, 3, 4, and 5th wave, which is my preferred idea. So if this is true, I think we should have a chance that we see something like this. So maybe the first month, at least many weeks or even month in 2026 might give us even higher grounds. However, after that, I expect that the market will come as usual to this level. Maybe this is helping a little bit, the Fibonacci levels, whatever. We will see this when we know how high this point is. Then we can take the measurement and see where the market is turning. But you can see, okay, we need to expect that the market will do something like this in the near future. So please don't be too aggressive in keeping your positions if you don't like a setback like this. The good thing is we can see here on lower time frames. This is not the video for the lower time frames normally, but I just want to show you. This is now the 4-hourly chart. Do you remember? This was 3, this was 4, because it's absolutely corrective. I take away this drawing here. Can you see this? This is absolutely corrective. So no doubt, but it's too small for a full-fledged correction. So after that, we had a strong movement to the upside. Okay. And now see this one. Is this corrective or is this impulsive? Just to compare, impulsive moves are looking like this or something like this. Small setbacks, less overlapping. This is a lot of overlapping. This is corrective. And now let's see what is happening from here. And the next question, sorry, I skipped this. Let's check, is it big enough? Yep, it reached Fibonacci levels, so perfect. So the area is reached, no problem at all. So what I want to see now is after that, an impulsive move up. Impulsive move is a 5-wave move without overlapping. Ah, perfect. Looks awesome. What we now need is a setback. What setback? Yeah, from here to here, ideally into this area here. But not only reaching this area, ideally it should be something in a corrective way. Something like this, alternatively like an ABC or kind of this one. No matter which one, you can interchange this, whatever it is, but if it's corrective, you have a good chance. Reaching this level is giving us a good idea to maybe re-enter the market when the market is breaking through these intermediate highs toward continuation to higher grounds. So whatever you see, until now, there's no indication that in the next days the market will go very low. I don't think so, because even on lower time frames here for hourly chart, the indication is still it's still bullish. And the indication is still bullish. Here we don't know this yet. We have to see this in the next few days, but all the indications are no, still bullish. And the overall picture is allowing this. Nevertheless, when the top is reached, I'm not sure exactly where it is, but I'm just guessing. Please don't take me literally. But I'm just saying something around 28,000. It's not because it's a big number or whatever. It is just to give you an impression. Okay, after this one here, something roughly similar here. Yeah, it is not exactly the same, but the first and the fifth are very often similar. It can be very long with the fifth wave, so that's the reason why I don't suggest you to sell short the market or close the position right now. I just suggest to keep it running as long as this pattern is continuing, as long as this is not giving you setbacks lower than what we've talked about, then I see a good chance. So I would not panic right now, but I would not go away too far, because there's a chance that the market will turn around and give us the setbacks like we've drawn before. However, after that, maybe for the next winter rally or Christmas rally next year, 2026, it might become interesting to re-enter the market, but this is too far to judge it right now. So it was a little bit longer than I expected and I wanted to, but I hope this was a little bit entertaining and giving you an idea how we are looking at the market. It is not that we know what is happening next, but we can see that these chart technical patterns occur again and again and again. And as long as we can recognize them, we can say, okay, we are still continuing this. As soon as the market is not continuing like this, if the market is, for example, instead of going like this, is going like this, you can expect exactly the same, but in the other way around. So it's not necessarily only for the long side. It's the same with the short side, but this is a story we can talk another time. But you can just see here, for example, and you can see here, and you can guess this was also Fibonacci and a continuation to lower grounds here. So you can see this is no matter what time frame. That's awesome. You can also use this intraday if you like to, or as an investor in the big picture. And no matter which direction, you can apply all this. If you are eager to see more, please drop a comment, press the like button, and of course the subscribe to not miss anything in the future. Currently, to be honest, I'm a little bit neglecting the English channel here, but if I see that there's a high interest in this content, I can do this on a regular basis because I have to do it anyway for my own analysis and for my team and our clients. So don't worry, ask for more and you can get something. So crossing my fingers for you, wishing all the best for you, your family, and all the beloved people around you, and hope the best for hopefully healthy, lucky, and at the exchange and the markets successfully 2026. Have a good time.